Amazing. Awesome. Alrighty. Well, first of all, the markets yesterday, boy oh boy, it was a bit of a train wreck. Losses were incurred in both the commodities space and the FX space and the stocks space as well. We got one win in the Dow Jones. We've got about four losses across our triggered pending orders. One in gold, another one in Aussie something. They're all still in the charts anyway, so we'll go and cover them off. Realized yesterday we didn't actually cover the fundamentals for this week. So we actually had the RBA interest rate decision, which again came at a sustained 4.35%. So no change there for the Oz. Later on in the week, we don't have a huge amount going on, guys. Pretty quiet week this week. But of course, we must not forget that we're on the last week of the month of the last quarter, the last month of the quarter this month, okay? Before we enter Q4 of 2024. Unbelievable that we are already there and pretty much underway with that. This Q4 session is going to be the most volatile and the most important of the year to date. We have the US presidential election. We have the 25 forecasting reports coming out from the Fed. We have a lot of other things that are being tied into the situation with the UK economy as well. All that are going to be causing a lot of volatility, I would like to think, within our trading assets between especially the months of October, November, before we start to see the volumes die down again for the Christmas season in December and sort of first week or two of January. So a really, really big couple of months ahead. So this week, the highlights of this week, I would say, are probably going to be the Chair Powell speech, and that's at 2:20 on Thursday afternoon. Because of the time of that speech, I'm probably going to call a complete and utter blanket ban on trading the US Open on Thursday, simply because of that speech. I think it's going to be quite a big one. They usually are anyway, but after the nature of the 50 basis point surprise cut from the Fed that we've just recently had, I think it's probably wise to pay that a very good bit of attention, because there is going to be, of course, probably a bit on that. Also, what we're looking at next. Dynamic approach, is he going to be hawkish or dovish, and so on and so forth. So I'm probably going to book that in as an actual event to participate in, and change the time of the stream on Thursday. On Friday, we do have the core PCE price index monthly data for the US, which will be the highlight of Friday. At the moment, the analysts don't expect any change in the data whatsoever. So it'd be interesting to see where that one goes. I mean, it's 0.2 at the moment anyway. If we get a 0.4 reading, it's going to be quite bad. For the stocks, probably going to see quite a bit of a backstep from their current level of growth and rallying that we've seen. If it's a minus 0.1 or something, then it's probably going to be pretty damn good. We're probably going to get quite a bullish result in the afternoon there. But at the moment, forecast 0.2. And I don't think that's going to be too much of a market mover whatsoever unless there's a surprise in store for us. So, back to it then, starting from the top. First of all, UK Brent had a wonderful breakout yesterday and a really, really nice big move. We jumped up here at about 3:15 in the afternoon, hit this area here, this nice sort of ceiling on this 15-minute time frame. See this quite clearly, sort of zoning on zoning here. And what a sell-off. It literally got slammed right from 75.40 all the way down to the low of 73.40. So really, really nice big move down. We came back. Obviously, we broke structure. The pending was triggered. Nice range continuation that we're looking at here for another move back all the way down to 71.85. We got the breaker structure. We went into profit quite swiftly, and bang, we were stopped out of that one before the end of the. Actually, no, not before the end of the day. It was quarter to 4 in the morning when we got stopped out, and then in actual fact, we came up to form a new high. So now we're trading up at 75.67. It does at this stage look like it's going to continue, but there are no present trading opportunities available in oil. Another one is gold. So gold, unfortunately, guys, was here. We got this sort of breakout of the structure. Again, looking for, fixed positions, really. Came up for that 1 to 2.27 there. Came straight back down, stopped out instantaneously on that one. Aussie CAD, and there's no, don't worry about trading opportunities. There's none there that I like at the moment either. Aussie CAD, this wasn't really sort of adhering to every single rule, right, with the Aussie CAD. Now, one of these, I think it was the Aussie CAD, to be honest with you. So, yeah. So the Aussie CAD here, we got this breaker structure, right? But the actual fact is we came right up to this high and then came back down. So this trade is null and void, okay, on this one, right? Because the market's come up here, we've broken above this area, we've come back underneath it, we've come all the way down here, we hit this area, which is no longer the successful structural breakout. We came actually quite far down to that low, but then it came back on itself again. So we're seeing a lot of this flip-flopping at the market, a lot of it, choppy, ranging price action, and not even acceptable ranges to trade. It's just not that great. At the moment, we're currently trading back up at this area in here, but it's just not worth trading. There's nothing here that's suggesting that we should be in this one at the moment. So again, we're going to let that one go. Aussie yen, another one here. Just looks just looks crap, doesn't it? We got a decent breaker structure, not bad at all. We came down to around this area in here. It is a point there at a TRF, but it is not a point of any of these areas back here. And it's just kind of stalled there and then came up. And amazingly, we've done absolutely bugger all today as well. Stuck in that, stuck in this. Could be a potential breakout pattern starting to form. Honestly, though, I don't even think it is. I just think it's a lack of trading volume, guys. I think it's incredibly tired out. When we look at the daily chart on this Aussie yen, that's where we are at the moment. One really big long leg up. No major price action pullback or anything to be had so far. And now we find ourselves in the final week of September, the final month in the quarter of 2024. So I just think it's had enough. Going to be profit taking, a lot of range bound price action around here for the time being. So my consensus here after having a stab at this one is ultimately just to let the damn thing go and be done with it for the time being. Aussie NZD, again, not looking too much better. Just this kind of arcing choppiness. The odd and occasional volatility swing that would be really nice, when we're looking back and we're hindsight trading, we're thinking, oh yeah, that's not bad. But actually in real time, there's nothing really here for us. We've got a nice level of liquidity underneath, okay, at around this area in here, which isn't too bad. And of course, we have the ceiling above. We have the ceiling above in here, right? So that's not too bad, except for the fact that we've actually only got 1 and 2 waves done. Okay, so it's incredibly unlikely. The probabilities are not really on our side to be trading. That is the real range. The real range in here is this one. That's where the price action's taking place most of the time. But I don't like trading in between these two margins at the moment. I mean, the lack of success from these waves in here is concerning as well. We had a good couple there, fine, back in the day. Then we've had range, very, very quiet, no trading volumes. And then eventually we get 1 win there and 1 win here. And in this area here, it has another one, but this is fundamental, by the way, because of the RBA event. Probably wouldn't have even happened if it wasn't for the RBA event. So in actual fact, we're just stuck with a couple of successful runs and a lot of market exposure for the premise of taking these kinds of trade ideas. Now, another thing to remember, we're looking at the range floor and the range ceiling thinking, oh yeah, that's a good margin of trade. But actually, that's your breaker structure area in there for a long. Okay? Now, if you want to take a trade idea in there, that's absolutely fine. Let's go for a breaker structure trade, the target profit, and your stop loss. Okay, that's going to yield you a 1-to-1. Okay, stuff we don't get out of bed for, team. We don't want anything to do with it. So we're going to have to let this one go as well and let it slide. There's nothing there for us. Aussie dollar. Again, it's been okay over the course of the month so far. It's had some pretty decent momentum, I guess you could say. A lot of areas where it has ranged for quite some time and then has these wild strikes of volatility all of a sudden from fundamental catalysts. But again, we've reached this area where we've just been dwindling along sideways for the best part of for the best part. Well, actually, no, that was Thursday, wasn't it? So Thursday, Friday, Monday, Tuesday so far, going into Wednesday, and we're not really making any concerted effort in any direction. We might be going for a breakout for the long, but the breakout for the long is really under question at the moment because of where we are with our liquidity. Now, in the daily time frame, as I said yesterday, a little bit ambiguous around here. We don't know exactly where we should have our zone. So the best thing to do in that situation is just to have the damn thing wide. Okay, this is the daily chart after all. So if I unscrunch the daily chart, that is not a wide level of liquidity, is it? Right? That's a relatively normal level looking ahead for us. So at this stage, there is no trade above because we have to wait for a break, close, and retest of the damn thing before we get going with it. We could look at a counter trend trade, but I don't want to be looking at anything that long term yet before we get into our sort of next trading quarter, if you like. So again, Aussie dollar, I'm afraid, doesn't look like there's much there to concern ourselves with. And that's absolutely fine, you know. That is absolutely fine. That's the way it's going to be at the time being. CAD Swiss, we were looking for a short. For any of you who did decide to take the long from yesterday, the one that I said I didn't want to take, you actually would have hit TP for like a 1 to 1.5. Not saying you should have taken that one because frankly I said to everyone don't bother. But that was the one trade that actually did hit target, lo and behold. We didn't really get the short criteria. We stuck our sort of teeth out here, but still, yeah, not really good enough for that big position back down to around 62.10. And that was that. CAD Yen. This was another one from yesterday. We actually came up, broke structure, went for the entry point at around 8 a.m. at the FX breakout this morning. And that one amazingly came back and went to stop loss immediately, straight the way after. So that took, honestly, a couple of hours. And that one was another 0.25% down. Looking ahead, future potential for this one. I mean, it's really down to you. I mean, we've got a sign of trend structure ever so slightly in there. Very, very freshly formed. I mean, I'm not kidding you. It started, from there. So we're right at the beginning of it. If you'd ask me, what do you think is the sort of the level of accuracy or efficiency with these two areas at the moment, I'd probably say, 30%. We've got some good highs and lows being formed in there at the moment, but the market's just not really wanting to go for it. It's just not really having it this time. CAD against the yen at the moment all day. We came up to an entry point, we came down to a stop loss, and then from that point, we've just gone sideways. We haven't done anything. And if you think about the day's entire move here, from this high down to our current level there, that's a 0.39% move, a 40 pip move so far in the distance over the course of 8 hours. So we're not really seeing the trading volumes coming to the market. Let's just take a pause on that CAD yen. Another thing that's worth visiting is the VIX index, right? It's level of volatility based on the Standard & Poor's. Now, if we look at the daily time frame here, all we've done is crash And we are flatlined here, folks. Absolutely flatlined. Trading down at 15.99 at the moment. The September high is 23.70, which was paled in comparison by the level of volatility we had in August. Do you think that it is a coincidence and nothing more that our August gains were record-breaking at over 32% in conjunction with what's happened in September so far? Right, so definitely not a coincidence there. I mean, we're at the kind of baseline level of volatility here at 15.99, so it really puts things into perspective. So another one on the books yesterday was Euro Oz. Euro Oz at the moment still trading between the no man's land. Both of these pending orders are live and still active. I don't really foresee any reason to remove the Euro Oz orders from the market. At the end of the day, they are still a sort of satisfactory trade idea on both sides. We're just going to have to sit tight and wait to see what happens, probably based on the current trajectory of our previous trades. Might not be that good, but we're just going to run with it anyway. There's no reason, there's no rules being broken or anything. It's just if the market wants to get going or not, if it's going to continue flip-flopping. All right, so Euro Yen. Possible, I would say there's probably a possibility here. We've got a nice ceiling of the market at around that 161.50 area, possibly, yeah, about that 161 area. And we do have a relatively well-established floor in the market here. We're not going to take the piss here, guys. At the end of the day, you've got 1, 2, and 3 successful waves so far. It's not greatly established, but you do have the possibility of another rejection from here, coming back down to sweep those lows at around 159.33. If we look at the larger trend here on the daily time frame to get some perspective, we can see that the market has traveled from a double bottom here, so there is more likelihood that the market's going to continue its trajectory up to around 163, which means that after this price action pullback here, the likelihood of trend continuation is probably more so than the likelihood of a rejection of that area. In a sort of travel back down in that 156 place. So you do have to take that into consideration. I mean, I don't want to be caught clutching at straws here for the sake of just providing some trades. At the end of the day, if there's not any sort of things that I'm happy with in the market, then I'm not going to tell you to do the same thing, because at the end of the day, the track record is built entirely upon trades that are provided. So if I'm not comfortable, then I'm not sending it out. But from an analytical perspective here, you may come across the opportunity to trade that Euro Yen short. I think based on so many inadequacies like this, for example, we have this really nice sweeping move up here. Very nice. Same as the one that we had on the downside here. Same as the one that we had on the upside here. But then in the middle, we've got this, which stops there. So that will make sense, right? So you'll probably say to yourself, okay, that looks like a really decent level of a breaker structure, somewhere that I could probably look to gain access to a short in the future. But wait, we've actually hit this area on the way down. We've come back up to retest it. So now this point of liquidity is one to contend with. And if we look at this point of liquidity, because of the weird and wacky trend that the Euro Yen's been in at the moment, and we drag that sucker left, then you're going to find out that actually that level of liquidity is from here at this one, which now makes the trading margin exceptionally tight and difficult to navigate. So I just don't like it. Yeah, I'm not a fan, not yet. Euro NZD has been phenomenal, and there's no other way to say it. Euro NZD as of late has not been phenomenal, but the last couple of days this week it has been really, really good. The move that we had today on it was great. We did have to contend with this overnight rubbish of a lot of a range here, but yesterday it was a real contender as well. Beautiful breaker structure, dropped straight off the face of the planet. We did have this area to contend with, but I think in hindsight, if that was a level that we had to contend with here for a trend continuation trade, you still would have been happy jumping aboard for the 30 pip move down to that area there before we'd even reached the TRF. If you zoomed back in time, this is the floor of the Euro NZD where we would have been looking for a target profit. That was the ceiling up there. It just made sense. Unfortunately, this is not one that was in our toolbook. And so therefore, well, it is what it is, isn't it, really? But I think from that daily chart, that looks at this stage like it wants to contend with the cash-rich area down at 174.90. Really cash-rich area down here. Lots of institutional buying interest. And ultimately, major point of inflection. If you're thinking about where an asset wants to trade to, it wants to go to where the money is. So therefore, it's attracted to the money. This is without a shadow of a doubt somewhere where I'd be thinking that's probably going to be where it bottoms out. So if we're looking for a break of structure entry barrier to this one, that's going to be about here on the daily time frame, which means if we get down to the 15-minute again, we've actually built ourselves a pretty decent trading margin. So what I'm going to propose for this one is a break, close, retest, entry barrier trade. Entry, obviously speculative at the moment. We don't know exactly where that's going to be. And then your stop loss above there. So let's have a path, breakout, retest, continuation. That's going to be your rough trade. You've obviously going to have the aggressive entry somewhere up there. You're going to have your conservative down here with your stop loss a little bit lower as well, just above that point of liquidity. So in there, for example, like that. And there's a couple of trade ideas there. So that's not looking too bad at all, that Euro NZD. Obviously, we have the opposite as well. We could look at taking the trade north to this point here. I mean, even, frankly, to that point there. And taking along there. Now, is... what am I looking for here? Hang on a minute. Yeah, so if I'm not mistaken, whoops. Yeah, if I'm not mistaken, we have a relatively new member with us today, relatively speaking. Not entirely sure of the experience level, but welcome aboard. I don't know if this is the first time you've seen one of these live events or not. If it is, then obviously welcome aboard. Great to have you with us. Just so I'm absolutely clear, well, I do appreciate questions being asked first and foremost. So if you have any questions, please fire away. Don't be shy. We're all friendly here. And just so you understand, it's very easy understanding a breaker structure and pending orders and stuff like that if you have a little market experience. If you don't, then I can go through that with you in another time, whenever that's fine. A break, close, and retest, however, is where we're looking for the price action to essentially come out of a area like this, come back to retest it, and then continue, which is when we can then enter the market. So you will not be able to use a pending order on a position like this. When I call out a position like this for the fund, it needs manual attention, generally, 9 times out of 10. What you do have the option of doing is waiting for the market to do this part of the process. So let me just make this absolutely clear. So let's say left of the line, okay, you let the market do that. When the market's done this and completed this part, you then have the ability to place a pending order after this takes place, right? So when this point is hit, that dot there, you can then put your pending order in and let the pending order trigger upon the continuation of the price action. So the market comes down, it comes back to retest. Once it hits this area, you can then place your pending order in the market so that when the market continues down, it triggers here and then you get to your TP. And that's what we kind of do in a nutshell. If you didn't already know. If you did, then fantastic. But if you didn't, there it is for you. So, yeah, that's that. So, Euro NZD, your long trade as well. Very clear breaker structure here, team. not too bad at all. Double bottom, looking to clear out any potential short liquidity there. Once the money is in the market, we should hopefully see it start to rally up a bit. I mean, you know, we are trading when we are trading. Like I said at the beginning of the session, very, very poor week for trading this week. And it will be deemed as such around the world by any professionals who know what they're talking about. But we do have the potential for the long here for a 1 to 2.25, and we do have this short here for approximately a 1 to 3. We don't know exactly where we're going to be when that one goes, but that's about where we're looking. So Euro NZD is going to be tagged officially. Not bad. Not bothering with the euro dollar. Pound against the Oz. I mean, really looks like a murder scene at the moment. I don't want to be anywhere near that one. Pound against the CAD. Frankly, this looks even worse than the GA. I mean, look at this stuff, man. It's end of quarter. You know, it's end of quarter price action. The markets have had their quarterly moves. We've had these really nice big asset growth periods take place. We're coming to the end of the quarter. We're coming to the beginning of new school years, end of the summer holidays, coming into the winter months and stuff. It's all very cyclical, and it happens every single year. We just have to be patient, let the volume start to pick up again in the first week of October. So that's where we are at the moment. Nothing to be said about that. Pound against the Swiss. I mean, yeah. Let's have a look at the daily quickly. Yeah, that looks like it wants to pull back to me. We've got a really nice point of liquidity in there. Major inflection point. Middle of the M reversal. We had the retest of the M reversal, but we didn't continue down. We've actually broken above. I would certainly be thinking that this is going to be in pullback mode before long. So looking at where that price line is at the moment, there's quite a lot of inflection around here as well. Maybe a little bit lower there. So I'm thinking possible short in the pound Swiss back down to approximately 112.36. That might not be too bad actually. Yeah, it makes sense on the 15-minute time frame as well. I wouldn't be taking it all the way back down there though. I think for me, I would probably I'd probably be looking for about there. Breaker structure for this one is going to be in here. And that's the trading margin, isn't it? Yeah, that's the trading margin. So you have a TRF. Your TRF's at 112.90. That's your TRF in there. But I think that could be a plausible trade for a 1 to 2. Pound Swiss, short. Right, pound yen. That's a nice trending market. Pound yen's not been too bad. Daily time frame as well. We're getting up to a level of interest here without a shadow of a doubt. Again, such a steep climb. Certainly could be pullback mode for this one. We're looking at this area in here as the potential target profit, I would say. So 15-minute time frame. That's going to be a trading margin. Okay, and that's not big. That's not a big trading margin. In actual fact, we've already been doing this, haven't we? All in the same day's candlestick. So if we use that as our baseline for the short entry, target profit's already been achieved a couple of times. That's actually good. That plays in our favor. So then we'll be looking for the breaker structure underneath there, target profit, and ultimately your stop loss, which you want to have at the bottom of the big zone, not in the middle of those two, because the margin's not there for it. Okay, but remember that this one only can be plugged in as a pending order after the market reaches liquidity and then starts to reject. So it needs to come up to this area first before you can plug the pending order into the market. Okay. Also short. Cable. I don't want to be short on all the pound pairs now, guys, so probably going to take a pass on this one anyway. Also trading against the US dollar at the moment, which is probably looking to head lower based on interest rate attraction. We are trading kind of past a level of liquidity with a trading margin up to around 135. So again, this doesn't look like it needs to be in pullback mode. We've recently had a relatively decent corrective wave. So yeah, I mean, this one is like, it could probably continue. So I'm going to give that one a pass. NZD CAD. Not bad. Coming into a major inflection point. Money in the market here. Yeah, that's not too bad at all, actually. It's quite a nice one. I think for this one, looking for a pullback, you'd probably be looking for something like that as your TP. There are a series of these moves. Actually, depending on where that goes, you probably get away with having one even higher. Yeah, probably like that, for example, to be fair. So it depends where the structural point is on this one, and this is going to have a bit of ambiguity to it. You're certainly going to have to know what you're doing to be able to get a profitable trade off this one, because the structural point hasn't been generated yet. So a structural point is going to be made by something, you know, for example, like that, right? So the market would need to, like, you know, kind of stop, pause, have a red candle at the top somewhere, maybe range for a little bit, and then break down. You'd want to see the clear point. The structural point for an entry on a trade like this at the moment is there. Just for those of you who don't know where that would be, that's at the previous open of the candle, right? So previous low, if you like, bottom of the body of the candle and the top of the other one. So that's going to be, you know, where the current level of structure is for an entry point. But I really don't advise you guys all jumping aboard on something like that. So wait for the market to pause, build a new entry point by forming an anchor point, and then hopping aboard a short from there. You know, you definitely be able to pull out a 1 to 2 plus on that one, and take this as your TP down here. So you'll be looking at a TP at around 84.90. This one just requires that anchor point to be formed, so stay vigilant on that one. This is our NZD Swiss. Break a structure trade for the long. Also short from up at the highs going down as well. It's going pretty well at the moment, but, you know, I'm not holding out anything additional for it. NZD JPY, fantastic trending pair. Don't want to be invested in anything else in the yen at the moment, though, due to our market exposure in the Japanese yen. NZD USD had a rocket up its rear end today. Very, very weak US dollar, to be honest with you. It's been grinding along down at around 100 for a while now, waiting for it to break structure properly and start going back down into the 90s. No trading opportunity on things like this, though. I'd only look at the NZD CAD on that one instance because of where it's trading to. But to be honest with you guys, this one is trading above liquidity. So the likelihood is this is just going to continue after a brief price action pullback. USD against the CAD. Really good day yesterday, actually, in a bit of a surprise turn of events. It's coming back down to the previous lows now, but honestly, I'm still not a huge fan. I mean, we've got the CAD yen open, we've got the NZD CAD. We didn't take the pound CAD. You know, we're not looking at the Aussie CAD, but we still got the Aussie CAD long. And yeah, not hugely interested in taking that one right now. I think we'll reevaluate that tomorrow. I'm certainly not trading that. And yeah, this is just getting crushed, isn't it, at the moment against the Sing. But there's no point talking about that one at this stage anyway, just yet. All right, so that pretty much wraps it up for those. So we'll work our way over to the US markets then. The time right now is 2:10. You guys have about 19 minutes to go before the US Open. So we'll fly through these, get you ready for this afternoon session, and yeah, wish you the best of luck for it. So, looking at the US markets then, yesterday was horrendous in terms of the breakout volume. We had nothing going on. This is what we had to deal with yesterday. It was crap. Looking at where we are today, things have improved slightly. Not hugely, slightly. We're still, unfortunately, trading within these really, really unorthodox margins, having the high and the low inflection point of these wild volatility swings. In light of what's happened yesterday, I would be certainly more confident in looking at that being the high and this being the low instead. And so if we're wanting to look for those trading margins to sort of navigate the US tech stocks today, this is what you're going to be working with. Now, in terms of your criteria for entry here, your breaker structure points, you've got a breaker structure point there, okay, for your short, and your breaker structure point for the long is here. Now, the long almost doesn't seem even relevant at this stage because of where the market's trading, but if the market comes down, breaks into liquidity, then you are going to look at taking the long at around 1988 to go up to that high there. So those are the two trading margins that you want to be keeping an eye on. At the moment, I've got to be honest, guys, the NAS 100 is looking pretty rough. It doesn't look good to trade, but that's the trading layout for it. Now, based on a 1 minute time frame, even though it's like only taking one 15-minute candle to do it, you certainly can see the benefit of trading between these two areas. It will work, but you just have to do it with caution. You have to do it with caution. Looking at the Dow Jones 15-minute time frame, that's what happened yesterday. The only win of yesterday was that trade in there, and to be honest with you, it was so damn close. And from that point on, it did nothing. I mean, it really did. It just ground along sideways. There was no one trading it. It was really, really quiet. We have got a bit of a breakout going on as we speak. We are officially trading outside of the liquidity on this US Dow Jones. If we go to the daily time frame, okay, new all-time highs being formed. That is today. So, even this one candle here is formed a new all-time high. So the Dow Jones really is putting the foot to the floor on this one, continuing to show good growth, but we're not seeing that consistency of the moves this week so far, and I do appreciate we're only on Tuesday. But if you want to trade it, again, we are going with the same format as some of the other assets that we've looked at a fixed 1-to-2 risk-reward ratio based on break of structure breakouts. So for this example, for this long, actually, it's a break close and a retest now. So we do want to see the market break free, come back to retest, and then continue. And when it continues, we will lock in our 1-to-2 risk-reward ratio trade idea. And that can be done in a 1 minute. Yeah, actually, no. It'll be the 15 minute for this. So yeah, it will be a 15-minute BCR actually of this one here, folks. So yeah, it's going to be a little bit of a headache for you, I'm afraid. But that is what it is. The reason it is what it is on that one and not a 1 minute time frame is because of where we are in the bigger picture. 15 minute is the absolute bare essential. If you're trading a short, it is a 1 minute break of structure of this area in here. And you'll be using the target profit that we had yesterday. It is identical to the trade that was taken yesterday. This is representative of the no man's land. That is between 42.119 and up here at 42.215. And your short trade, I swear to God, I'm actually just going to copy and paste that trade because it is identical to the trade that you will be expected to take today based on today's trading parameters. Exactly the same one. Right, so that's your short there. That's your long in there. For the Dow Jones, it's a 15-minute breakout retest, aggressive entry for the long. maybe go for a 1 to 2, but a little bit higher up. So you're probably looking at something like this, for example, for your long breakout. And then the NAS 100s, you've got the trading parameters between these two areas. So if the market comes up to our cash rich area up here, we then drop down, we break structure, we enter the trade, we take the trade down to 1985. If the market jumps down before the market opens up from here, then we have to wait for it to traverse all of this space before coming to here, break structure, entry, and then take the trade idea back up to the high. And that's the plan for the US tech stocks. So, ladies and gentlemen, I am done. So it's the break of structure after the retest. That's correct. Yes, you're absolutely correct. Sorry for not seeing the question sooner, but you're absolutely spot on, buddy. Yeah. So does anyone have any questions? Anything you need to be aware of? Anything you're not currently so clear on before you get going? Great. Yeah, good stuff. Yeah, I think that's wise. Yeah, I do. I think that's very wise. Look at this. Look at the most important thing here, team, is always being spatially aware. Okay. Now we are aware that we are in the last week of the last month of the quarter. So, cyclically speaking, very very slow, rugged period for the markets. Things do not flow as they usually do. There is a lot of temperamental price action, a lot of flip-flopping caused from institutional asset reallocation. In a nutshell, banks taking money from the markets and putting their money in other things in the markets. So because of that, it creates a real minefield for the retail trader who's trying to especially run his fund, and they're, lo and behold, same as you guys, you're trying to run your smaller funds off of the major moves that the banks are generating. It's a difficult time. But this is why we have our risk strategy in place. Because our risk strategy can afford us loss after loss after loss after loss. We can have 6, 7, 8, 9 losers in a row and still only 2 winners, and we'll still be up. We'll still be at break even, or we'll still be in profit based on our solid risk reward ratios. So we have nothing to fear, but we simply have to be cautious. And remember, our number one role above anything else to protect our capital at all costs. And that's what I think we're doing. So have a good day today. Good luck out there this afternoon. Remember, be cautious, be vigilant, be on your toes. And I look forward to catching up with you guys in about an hour to see how things have gone. I'll be in the room. I'll be trading it myself. So good luck to everyone. And yeah, catch up soon. So take care, guys. Trade safe, and I'll see you then. Bye-bye.